The Star Entertainment Group faces big losses, a new inquiry in Queensland and allegations of dealing with a party involved in Chinese triad groups, how oil refineries have gone from paupers to princes, and the Game of Thrones prequel crashes the HBO streaming services as millions try to watch the show. It's Tuesday, the 23rd of August 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Are you a Game of Thrones fan?
Yeah, I watched the original series, and I suspect I will kind of bow to peer pressure and watch the new one. How about you?
Yes, I was. It got a bit more. Look, the first couple of seasons I thought were fantastic, and then, the more dragon action is going on, the less I got interested, to be perfectly honest.
It's like an inverse dragon kind of index. The more dragons, the less excited you are.
I'm sure this latest one will be full of, violence? Definitely. Sex? Definitely. Dragons? Non-stop? Maybe I won't watch it, Michael.
Well, considering it is actually called House of Dragons, I think you've got a fairly good chance that there's going to be some dragons there for you, Sean. So.
I'm trying to still work out who the Targaryens are.
Really?
No, not really. I was just wondering whether you knew who I was talking about when I asked.
No, I do. Anyway, I think it actually sets a pretty good goal for us. We need to get at some point where Fear and Greed crashes from popularity.
That'd be nice. Yeah, Spotify, Apple, whatever your favourite podcast service is, crashes because everyone's listening to Fear and Greed.
It might happen, maybe one day. Anyway, immediately after the show, you've got an interview today, something a little bit different today. You are speaking to the CEO of Optus.
Yes, Kelly Bayer Rosmarin, who's been in the job for about 3 years, and it's actually a two-part interview. Today, we talk all about Optus and the telco sector and how it works, competition. Really fascinating to get the views of someone as senior as Kelly is in the sector.
And the main story this morning, Sean, is an absolute cracker as well. The Star Entertainment Group lost almost $200 million last financial year, stung by COVID restrictions and higher costs, in part due to the multiple inquiries it's faced and is facing still. And things don't seem to actually be getting that much better.
That's right. The Star should find out if it keeps its licence in New South Wales over the next week when Adam Bell SC hands his report to the casino regulator in that state. While it's likely to keep the licence, restrictions are set to be placed on the gaming giant, similar to those on Crown. Also today, Queensland public hearings into the gaming giant kick off. Not helping that inquiry, at least from the Star's point of view, was an ABC report yesterday that alleged that Chow Tai Fook, the company that owns 50% of the Star's multi-billion-dollar casino development in Brisbane, has links to triad criminal gangs. Whew. Lots going on there. Now, going back to the profit result, it wasn't good, and the casino reduced the value of its Piermont gaming complex in Sydney by almost $163 million. That reflects the impact of whatever the New South Wales inquiry comes out with, and probably the fact that there's another major casino in the city just across the bay. The Star said it was too early to understand the impact of the new casino on its turnover. Overall, revenue slid slightly for the last financial year, though, interestingly, its Gold Coast and Brisbane complexes are turning over more than they were pre-COVID, not so Sydney. Management of the Star is also in a state of flux, with incoming Chief Executive Officer Robbie Cook not expected to start till later in the year. For the time being, its chair is Ben Heap. He was a director. He's now interim chair. Its share price was down 3% on all this news yesterday. It's going to be in the news non-stop, I suspect, particularly in Queensland, but also in New South Wales over coming weeks because of this inquiry that's going on. I wouldn't want to be running that company right now.
No, probably not. How about local markets? What happened yesterday?
Well, plenty going on thanks to earnings season. First, top line numbers. The S&P ASX 200 finished down 1% to 7,047 points. The banks led the market down. Macquarie Group and Westpac both dropped nearly 2%. National Australia Bank was off 1.4%. And Commonwealth Bank and ANZ were both down 1%. Energy groups Woodside and Santos both fell sharply. Industrial property giant Goodman Group and Wesfarmers also dropped. Newcrest Mining fell more than 4%, giving back the gains of late last week. Michael, it really was a sea of red ink with only CSL and Telstra, two defensive stocks, ending the day positive among the very large caps.
A sea of red ink is just one of those lines that I just love. It's just so emotive. You can picture it, can't you?
When you're reporting on share markets, nothing like a sea of red ink.
Oh, glorious. Please carry on.
Look, there was plenty going on in earnings land. Cement, concrete, sand and gravel supplier Adbury reported that wet weather and rising fuel and energy prices hit its bottom line hard last financial year. Its share price ended 17% lower yesterday. That was the worst on the day. Healthcare fund NIB Holdings reported a drop in profit due to investment returns, but its share price jumped nearly 8%, and that was the best on the day. Another worth mention, EML Payments, the payments business, it's really struggled with regulatory issues at its Irish subsidiary. Well, its loss narrowed to just under $5 million last financial year. Management are going to undertake a review of operations. Revenues up. People like that, or investors like that. Its share price jumped 6.6%. Southern Cross Media's earnings disappointed. Ramelius Resources, the gold digger, same deal there. Retailer Adair share price fell 13% after it recorded a 30% drop in profit, hurt by supply chain problems. And finally, Michael, not quite a top 200 stock, but worth mention, shares in Australian Pacific Coal doubled yesterday after it revealed a 30-cent per share takeover bid from none other than Nathan Tinkler, or at least Nathan Tinkler's backed Navico Limited. Australian Pacific Coal owns the Dartbrook coal mine near Muswellbrook in the Hunter Valley. That is Nathan Tinkler territory through and through. Interesting to see him back.
Nathan Tinkler, that is a name that you just don't hear that much anymore. And we used to hear so much about him, particularly when he owned the Newcastle Knights there for a period. And it was pretty much every day he was in the news.
Horse racing at thoroughbreds. He was in coal mining. Bit of a fall from grace, but interesting to see him come back.
Yeah, absolutely. What about international markets?
Well, this week will again be about interest rates and how much the US Federal Reserve will lift them. At the end of this week, Fed Chair Jerome Powell is due to talk at Jackson Hole, Wyoming on rates and inflation, and that will provide some sort of guidance. Commodities are still trending lower. Brent crude is trading around $95 a barrel. Gold is a touch above $17.40 an ounce, and the Aussie dollar is trading around 69 US cents.
All right, plenty happening. We'll be back in a moment with the rest of the day's business news. Sean, Prime Minister Anthony Albanese yesterday said the country's enterprise bargaining system was broken, citing the fact that wages are not keeping up with inflation as proof that it's not working.
This will be a very common theme over the next week in the lead up to the Jobs Summit. Anthony Albanese wants to reform parts of the industrial relations system. He said he wants to see wages increase, and there are common interests between unions and employers that can help make that happen. He added that migration is part of the solution to Australia's skill shortage, though isn't the entire answer. Mr Albanese wants the Jobs Summit, which will be held next Thursday and Friday, to achieve practical outcomes focused on jobs and skills and boosting productivity. Don't we all want that? Also, briefly on the Scott Morrison taking on 5 ministerial portfolios without telling anyone affair. We need a better name for that, don't we?
Yes, it needs to be a gate, some kind of gate.
ScoMo gate?
Portfolio gate.
Portfolio gate.
Even that's not particularly exciting.
I like ScoMo gate.
Oh, okay. All right. Well, that's our working title, in case we can't come up with anything better.
And briefly on ScoMo Gate, the government is expected this morning to release the report from the Solicitor General on its advice, whether it was legal or otherwise. The coalition has said it will support any recommendations from that advice.
Sean, Federal Treasurer Jim Chalmers has announced a review of cryptocurrency assets in an effort to both understand and then better regulate the digital currencies.
It shows that the government's a bit worried about cryptos. Dr. Chalmers said the government will make token mapping a priority this year to help identify which tokens, i.e. cryptocurrencies, are being used in Australia and how they should be regulated. Dr. Chalmers said it was important that customers engage with cryptos in an informed and protected manner. Now, he highlighted the fact that advertisements for cryptos are creeping up at sporting events around the place and said the inquiry will look at gaps in the country's regulatory and licensing frameworks. It is quite a significant step towards doing something about the regulation of cryptos.
Sean, I know I make fun of you a lot for self-interest kind of governing some of your story choices, particularly when it comes to kind of renovations and things like that, because you are in the middle of your renovations. But this next story actually kind of serves my own self-interest. The Qantas frequent flyer portal crashed yesterday morning with members unable to log into their accounts. I was one of them trying to access to change some flights coming up, and it was a bit of a nightmare. And it all happened the day after Chief Executive Alan Joyce apologised for the airline's recent performance and offered travel credits and lounge invites.
You say it's just about changing flights coming up. Sure. You were trying to take advantage of that $50, weren't you?
I was trying to make them let me into the lounge, and they wouldn't.
Fair enough. People clearly heard what Alan Joyce said on Sunday, though, because everyone jumped on board wanting to take advantage of what Qantas was offering. The website was recovered late in the morning, and Qantas said the stoppage was due to high traffic volumes. I often think it's incredible. It always happens with Qantas and frequent flyers. When they make an announcement like that, how fast people move.
Yes, and look, I assure you that mine was just a coincidence and that we were just trying to adjust a few kind of bits and pieces. But anyway, I appreciate how it looks. And today appears to be the day for things crashing, obviously, with HBO crashing with House of Dragons. And I'm sure that's not linked at all to Qantas, but I just thought I'd mention it. Sean, the boss of one of the few large infrastructure assets on the ASX has quit amid the collapse of plans to push into the United States.
The chief executive of gas pipeline group APA, Rob Wheels, resigned unexpectedly yesterday after the group decided not to make an acquisition in the United States. He's been in the job for only 3 years. Throughout that period, APA has been looking at buying assets in the US. It was expected to go out and raise money to do so, somewhere between $2 and $4 billion. The market was very informed of that. But yesterday, Chair of the Board, Michael Fraser, said the company had decided not to buy offshore and will stick to its business in Australia. And then Mr. Wheels resigned. Not so hard to read between the lines on this one.
I think even I can manage that one. Now, being an oil refiner in Australia was one of the toughest businesses to be in. And not so long ago, the federal government was providing a refining support package to actually keep the big players here. It seems, Sean, that times have changed. And Ampol yesterday outlined a record half year.
Incredible. The oil refiners and the coal miners, they're the two groups which 12 months ago, no way would you invest in them, and you wondered whether they're going out the door backwards. They are so profitable now. Ampol announced a big jump in profit margins for processing crude oil into petrol and diesel. It meant earnings during its June half year more than doubled. Chief Executive Matt Halliday said it showed the benefits of the group's integrated supply chain. Also shows the benefit of high prices, I suspect. Ampol is setting itself to enter the electricity retailing market now. It's also pushing into electric vehicle charging stations. However, yesterday it said it had paused on its push into hydrogen, though it still believes it could be a green solution for the long-haul heavy transport sector. And I should add here, the government package was provided to keep the Lytton refinery open in Brisbane in the depths of COVID. That business's profit was 10 times higher for the 6 months to the end of June than a year earlier. Quite incredible. And I must add, it didn't receive any government subsidy in that period.
Wow. Engineering and property giant Lend-Lease has posted a big loss thanks to massive restructuring costs, Sean.
Lend-Lease really is a massive company, and it can be really hard to understand. I've never quite got my head around all the things it does, but it certainly makes a lot of money. Well, I mean, revenue made $9 billion last financial year. Its chief executive officer, Tony Lombardo, has been implementing a turnaround plan to make the business leaner, and that's cost money in terms of project impairments, tenancy impairments, and redundancy costs. Now, Mr. Lombardo is hoping it'll also make the company easier to understand. Yesterday, he said Lend-Lease had made significant progress setting up for future growth. The bottom line for the 2022 financial year was a $99 million loss. Its share price ended up slightly yesterday.
Now, we talked about this one last week, Sean, and after a week of due diligence, Nearmap has agreed to be acquired by US private equity giant Thoma Bravo.
The private equity group will pay $1.1 billion for the aerial imaging software company. The price is at a 67% premium to Nearmap's 6-month weighted average price. Chief Executive Rob Newman said his company's ambitions to grow in the North American market aligned to Thoma Bravo's vision for the business. What I love about this story is that it took about a week. That's it. It came in and they bought it. Now, the next story, Michael.
That's right. And look, we don't have favourites. We don't try and pick favourites here. But if we did, this one would probably be one of our favourites just because for a takeover battle, it has just taken so long.
It's gone on forever and ever. Link shareholders have finally voted in favour of Dye & Durham's acquisition of the group. The original deal was struck back in December last year. 9 months ago? And market moves have meant a lower offer came forward a few months later. There's been competition concerns and much toing and froing. Finally, it looks like it might happen. So we've had one that took 1 week. That's Thoma Bravo taking Nearmap. Another that's taken about 3/4 of a year.
It's taken as long as it takes to have a baby.
That's unusual analogy, but you're right. Yes.
Yep. It could be the new reference period for takeovers.
Maybe.
All right, moving on to overseas news. And China's central bank has cut a key lending rate for the second time in a week as Beijing tries to revive credit and head off a housing crisis.
With plenty of property owners simply refusing to pay loans on unfinished apartments, authorities are desperately trying to kickstart the housing sector. If you wonder why they're worried, the Chinese housing sector is at least as important to that economy as the property sector is to Australia. So that gives you a benchmark of why authorities are so keen to get housing going and the property sector going in China.
All right, now this is not good news. Sean, 6 months into the Russia-Ukraine war, a senior official from Moscow says there is no possibility of a diplomatic solution to the conflict.
Russia's permanent representative to the United Nations in Geneva told the Financial Times that the UN should be playing a bigger role to end the conflict and said the US and NATO countries were pressing Ukraine to walk away from negotiations. The longer the war goes on, he said, the less chance of a negotiated settlement. Russia invaded Ukraine on February 24. That's 6 months ago tomorrow. Meanwhile, the war isn't going all Russia's way, that's for sure. The daughter of a vocal supporter of President Vladimir Putin died in a car bombing outside of Moscow. That seems to have extended the theatre of war beyond Ukraine, Crimea, some of those areas, into the heart of Russia.
And finally, Sean, a bit of a change of pace to finish off. The prequel to Game of Thrones aired on Sunday night, US time, and so many people viewed it that HBO Max, which was airing the show, crashed.
Yes, more than 3,000 outages were reported just after House of the Dragon was released, though HBO said millions of subscribers were successfully viewing the show. House of the Dragon comes 3 years after the last episode of Game of Thrones, which currently has a record for viewers on HBO. That last episode, 19.3 million people. The latest show focuses on the Targaryens family's battles 170 years before the Game of Thrones is set. Now, HBO isn't the only streaming service to struggle with a massive audience. What a great problem to have. Remember earlier in the year, Netflix crashed when the season finale of Stranger Things was released.
God, I've got a lot of viewing to do. I haven't watched the new season of Stranger Things. I obviously now got to watch House of the Dragon. There is plenty of good TV. And Sean, before we finish up, can I just tell you, I've been beavering away here in the background trying to come up with a new name for ScoMo Gate.
Yes.
And I've been looking at all the various ministries that were involved. And when you take finance, home affairs, treasury, health, resources, the best I can come up with, and you really have to pronounce the H after the F, is Fathergate.
Fathergate.
Sounds a little bit Scandinavian, doesn't it? Fathergate. Anyway, up next is the Fear and Greed daily interview, and it is a cracker of a chat today. You're speaking with Kelly Bayer-Rosmar and the CEO of Optus.
Yes, I mentioned this at the top of the show. Great chat. This one was all about the telco sector, how Optus is competing against Telstra. Fantastic to have someone so senior in that sector on the show explaining her view of it.
Yeah, that's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 23rd of August, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.